Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing stocks with X dividends next week. So we're going to go ahead and use Y charts, Dividendcom, screen for about 30-50 stocks, get them screened out based on PE ratios under 25, yields over 1.5% yield, and yield on cost. Then we're going to take a look at their earnings, their net income, and their free cash flow. And then based off those, whatever stocks are left there, we're going to then order them by how many stocks have been paying out dividends, the longest, their payout ratio. And then that should leave us with around maybe 1 to 5 different stocks, which will be our stocks with X dividends coming up next week that look like great stocks to do a little bit bigger deep dive, go over their balance sheets, go over their their last few quarterly earnings and their last 5 or so 10Ks, their annual reports. So that's what's coming up in today's video. Of course, if you are brand new to my channel, I do make stock market and real estate related videos. So go ahead and hit the subscribe button, hit the notification button, and of course, let's go ahead and get into it. Okay, so we have Y charts on the left, Dividendcom on the right. All I've done so far is head over to Dividend.com, click on X dividend dates, punch in my next weekend dates, which are May 14th through May 18th. And then I went ahead and selected common shares, preferred shares. It doesn't really matter. And then hit search. Now what this is going to do for us is look for all stocks with X dividends next week. Now this is going to give me all the stocks coming up next week. Now I do this whole process because I don't have a whole lot of exposure to a lot of the names that are kind of hidden in the background. I hear Amazon, Facebook, Apple, Netflix. They're constantly on the news getting promoted by all these media outlets. Whereas some of these names here that are rated as 5 on the DARS rating, I don't even know, a couple of these. I know Honeywell. I just ordered a fan from Amazon for my desk at work. But a couple of these other ones here, I have no idea what they do. It looks like a couple of financials. We have Microsoft. I believe we have M coming up this week. Home Bank shares, Snap-on. And Valero, I saw Valero in here. Maybe I did. I think Valero. Yep, Valero Energy right there coming up. M right there. So all we're going to do, I think Yum is in there somewhere. So all we're going to do is take about 50 stocks from this list. You can see that there's multiple pages here, up to 3 pages or more. And this page here has 100 stocks. So I loaded up my Excel. I just selected the first tab here. It shows that there's 101 selected. That's mainly because I have the stock symbol selected as well. So this first page has 100 stocks on there, and all of these have a rating of 4.0 or higher. Now, the DARS rating system is rated right here. I'm not going to spend too much time on it. I'm trying to make these videos as quick as I can. So you can go ahead and pause the video, take a look at what the DARS ratings basically screens these stocks off. Basically anything with a 4.6 and 4.6 or higher is highly recommended. Anything with a 3.6 through 4.5 is recommended. So what we're going to do is say we're going to take about 50 stocks. So there's a lot of stocks on here. So that'll probably give us all 4.2 and higher. And then we're going to enter those into Y chart. So what we're going to do here is start at the top because we want our highest ranking ones. And if you don't see the DARS rating system, all you have to do is create an account on Dividend.com. I have a video talking about how the X dividend is pulled, how the dividend is pulled on the X dividend date from the stock. You guys can go ahead and check that out. It's using AT&T as the example, and it's a really good video because it kind of showcases that day end it closed at X amount, and then when it opened up it actually decreased by the dividend. The dividend was pulled out of that stock. It's a really good example there, so go ahead and check that out, top right corner. So all we're going to do here is open up Y charts and begin typing in these symbols. Now I haven't found a good way of doing this other than just doing it manually here. So you just kind of punch in here, and now you can kind of keep track of how many of these stocks you're entering in. But I'm going to go ahead and just hammer in, a good amount here until it goes off screen. Eli Lilly, I know Jeremy over, I think that's the golf. No, I'm thinking of something else. I think Jeremy over at the financial education I can't think of the channel right now. Financial Education. I think it's Financial Education. His channel, I believe he's talked about Eli Lilly in the past. So FDF, whoops, FDEF, UTX, ATMO, ATO. So all I'm going to do is go ahead and pause the video, continue to punch these in, and then I will be right back. Okay, and we're back. So what I did here is there's 23 per full screen here. So I took 23, 23, and then initially I had around 10 or so. So I have around 50 stocks here loaded up over on Y charts, or a little bit more than 50 stocks. We're going to be doing a pretty good screen today. So next, what I want to do, so we use Dividendcom. That's completely done and out. So now I'm over on Y charts. Now, I have a link on my website how you guys can access Y charts completely for free, and it comes with all my financial metrics that I'm using for this. I also have a video kind of showcasing that, so if you'd like, you guys can go check out the video, top right corner. I will have that link there, and that'll kind of show you how to have access to this website for free. So all we want to do here is we can screen up to 12 stocks at a time. So all we want to do is count up 12, 2, 4, 6, 8, 10, 12. And then what we have to do here is uncheck every single one of these. Now, I'm not going to count how many of these stocks I am unchecking, because I know we have about 50 or 60, because I pulled in 23 per page size, and then I had an additional like 15 or so. So we're screening about 60 stocks, and I kind of zoomed in just a little bit. So here we have 12 stocks selected. The year doesn't matter. You can have it at 3-year, whatever. Next, what we want to screen first for is the PE ratio. Now, the average S&P 500 PE, like the S&P 500, I had it loaded up in the past on my last video. It's right around 24, 25. So you guys can screen any as you would like. I go ahead and just keep it simple. Keep it at 25. That's what I've been kind of screening for. So here on the right-hand side, you're going to see the PE ratios from highest to lowest. Now you're going to see this color. It's kind of like a, I don't know what kind, Eli Lilly. So basically, you look for the color, you look for it over here. It's third from the bottom here. So on your selected items over here, third from the bottom, you're going to go ahead and just deselect it, hit the X. Again, brown, fourth. Microsoft is sitting with a 65. That shot up very high recently, so maybe it could be a little bit off with their earnings due to the tax changes that's recently taken place. I've noticed a lot of stocks recently, their PEs have shot up just due to earnings. It's the way that their tax reform has changed their company, the way that they're being taxed, so they're taking advantage of it, and that's why it's kind of shooting up some of their PE ratios a little bit higher than normal. But I'm going to continue to screen out the stocks here the way I've normally done in the past. So there we are. We have everything with a 25 PE or lower. So all I do next is go ahead and continue selecting the next batch of 12. I think that should put me right around 12. Nope, too much. There we go. Okay, so again, look for that one. Remove it. Third from the top or bottom. 34 is the red. Third from the top, and red again. Third from the top. And all I do is do this little motion, and there we go. We got our next batch going. So now I just deselect these ones and move on to the next. So I'm going to go ahead and pause the video. I'll be right back. Okay, and we're back. So we have still around 30, 40 stocks here left over. These all have a price earnings less than 25. Next, I'm going to go ahead and look for dividend yield greater than 1.5. The S&P 500 trades around 1.5, 1.7. So all we're going to do here is, again, reselect our 12 stocks. And we're going to look for dividend yields here on the right-hand side. Anything less than a 1.5, going to go ahead and remove. That means basically if you have $100 invested, you're going to get $1.50 for every 100. So basically just take your 100 and then it's $295, $294, $227 per year. And you can get it 100% invested over on M1 Finance. I have a playlist. I have lots of videos on M1 Finance on why I think it's the best platform for 2018 for new investors. It allows you to have free shares, partial shares, no fees, Roth IRAs, retirement accounts. You can reinvest your dividends very easy. It has a very minimum reinvestment cap of $10, and I have a whole bunch of videos showcasing all of that. So again, top right corner, if you guys want to check that video out. So I'm going to go ahead and deselect anything with a 1.5 or lower. And there we are. We have 1.5 or higher on the list. Now we can go ahead and 4 and got my next 12 going on here. So go ahead and remove Rockwell. So this process doesn't remove too many. I think the PE ratio removes the most. This just tries to get me a good return for my investment. I don't want anything. If I'm investing for dividends, I want to make some sort of a return. And then at the same time, let's see, federal 1.2, federal start from the bottom. Based off my investment, I would like some sort of a return in dividends that I can just be able to reinvest. And I'm also in it to get those, capital appreciation over the long term. And if you invest correctly in stocks, solid blue chip stocks that do increase their revenue, net income, free cash flow, which we are going to be screening up for next, then overall, over time, you should see an increase both in capital appreciation and dividend payments. So it'll be a win-win. So Heartland. And this process here, I'm just going to go ahead and keep you on just because it is just about done. We have that dark green there, Delic. And then we have that pink second from the bottom. And that gives us everything with the PE ratio under 25, dividend yield over 1.5. So now we have a pretty decent sized list still. So next, we're looking for revenue, free cash flow, net income. I want a percentage change over the last 5 years. Let's make it difficult. The economy has done very well over the last 5 years. I want to go ahead and knock out any stocks that have been negative over the last 5 years. 5 years could be, that should be pretty well. I like to do 10 years just because we came out of the recession about 10 years ago. That means we can just kind of see the history of the stock. So here, for example, during 2008, their net income dropped pretty good there in 2010, but it quickly recovered going into 2013, and then since then has done nothing but go up. And it's a solid, triple digits net income, triple digits free cash flow, and double digits in the revenue. So overall, pretty good. I'm going to go ahead and deselect it, move on to the next one. So anything with the negative here, this has negative free cash flow, negative net income, negative revenue over the last 10 years. We've had a good economy in the last 10 years, so I don't bother looking at these names. All I want to do, select it, see if it's positive, great, move on, positive, move on. We got a negative free cash flow. That's where your dividends are going to get paid out on those times of when the stock goes south, when the earnings drop down, they got to start paying out of their free cash flow. That's where it's going to come out of during those times. So anything with any sort of negative, I'm looking to invest for the long term in the stock market on some of my investments. With you guys, I'm sure going for the long term is always recommended. You want these solid companies that have a track record of being good companies. Free cash flow, very high up. This is Target. Target was a great dividends, like a great buy. In 2017, their price had came down very nicely, very nice dividend yield. Look at that free cash flow, up 514% over the last 10 years. That's basically a 51% increase year over year. Yum Brands, we have some negatives there. Valero, all positive. Ryder Systems, we got some negative free cash flow. Speedway Motors, we got some negatives in there. All positive, and then all negatives there. So now we have 2, 4, 6, 8, 10, 12, 13 stocks. PEs less than 25, yields over 1.5, increase in revenue, free cash flow, net income over the last 10 years. If you guys would like, you guys can try and squeeze it over the last 5 years, but you're pretty much going to get like the same results. I like to just see, their history coming out of the recession. And see here, this one it's going down over the last 5 years. Marathon has gone down in revenue and free cash flow. So what we can do is just kind of remove it for now. We're trying to be a little bit more aggressive because we have such a large list here. So Target, its revenue has dropped down recently just due to retail not being so hot, Amazon kind of growing and going, but it is a blue chip company. I'm going to go ahead and just remove it just because there are other stocks out there that are just better investments and better numbers right now. So there we are. We're left with 2, 4, 6, 8, 10. Now, of these stocks, which are at a discount. So for this kind of look at, this kind of sneak peek, I like to put in price and dividend yield, look over the last year. If you select a stock here, you're going to see we have to go down here and change your data format back to original unchanged. And now we're looking for any sort of stocks here that have a yield over price. That would just mean that if we're buying in right now, we're going to get a higher average yield over the year than price. So here, for example, that price is over the yield, price is over the yield. I'm just kind of checking these out and seeing if there's any potential buys. So Church and Dwight, we have a yield over price. The yield doesn't often come over the price here. You can see the price came over the yield, price came over the yield, and now that yield's sort of peaking out right now up on top. But this stock will probably trend back up into the $50 range. Just kind of its history, you can see here, it bottomed out back in November of 2017, came back into the 50s from, the low 40s. It did kind of hover around the $46 range, go into the 50s again. So it could be a potential, just kind of ride it up into the 50s. Very, home bank shares, yield over price. It looks like it's been kind of stuck in a slump here. That yield over price has been kind of going on for a while. Guarantee Bancorp, price over yield. Snap-on. So that's an interesting one right here. This one dragged down. So this would be something I'd want to investigate. The yield is overpriced by quite a bit, probably the most it's been ever over the last, let's see here, probably back in 2013 was the last time that the yield was as high as it is now. So I would definitely want to research what caused this. February, all the stocks had that sort of pullback, but it's continued to pull back into much more than any other, like the S&P 500 or the other stocks out there that have kind of recovered from that pullback. So this is one I would want to take a look at its last quarterly reports, take a look at the last 10Ks. Why is it continue to fall down? It hasn't made any sort of movement. It's sort of trending sideways right now, kind of building momentum. It could do either a large push up or it could go down even further. Look like it's kind of hanging out in its support level right now. So this could be a good buy, but of course it does need more research. Clan 10 Core, we have yield over price. Could be another opportunity to buy at a discount. This one here, check out that yield here. So yield shot up extremely high. So what they probably did is they increased their dividend here from, let's see here, they increased their dividend from around 20 cents to 45 cents. So they basically doubled their dividend payout, which doubled their yield. So that's why their yield shot up from, a 1.3 all the way up into a 1.9 yield. So that dividend increase, they doubled it, and that shot up their yield quite a bit. Let's go ahead and remove their dividend again, and price over yield. So let's go ahead and, I want to go ahead and take a look now. Let's see, what are we at? 17 minutes. I'm going to go ahead and pull all of these stocks up over on Dividendcom now, starting with PFS. Oh, it was right at the top. Okay. And then continuing on to TJX, FDEF, CHD, HOMB, HB. Where is HB? Am I blind? Let me just use my Control F. Oh, GBNK. I was looking for the wrong ticker. SNA, CLAC, QSR. So you can see here we skipped over a lot of these stocks while we were screening our stocks out, and many of these names, actually all of these names, I've probably never researched them in the past. So I'm going to go ahead and drop out of that one. So now I'm going to go ahead and be over at Dividend.com, and I'm going to go ahead and sort these in order of how long that they've had dividend growth. So we saw one here, 21 years of continued dividend growth, meaning that they raised their dividend year over year over year over year for the last 21 years. There's a 7, 5, 12 years. We'll go ahead and move him up. 7 years, that's above 5, so move him. 4, we have an 8, which is above a 7. And we have a 4, we have another 8. We have a 2 and an 8, another 8. Okay, so all in order, we have ticker symbol TJX at 21 years, CHD at 12 years. So both of these stocks here are recession proof. They've all, they've all paid dividends during the last 2008 recession. We have ticker symbol KLAC. I guess we could cover a little bit more. So TJX looks like department stores, retail, TJ Maxx stores, 21 years dividend growth, very low payout ratio. I like to see any payout ratio under 60. Dividend yield can vary between 2.0, 1.89 right now. So maybe the stock has came up a little bit in recent times just because they do very well during this, the economy. People have more money to spend in retail, so they do. Very nice dividend growth right there, 21%. You can see they increased their dividend from 31 cents per share to 39 cents per share. So basically an 8 cent increase per share each quarter. So 8 by 4 is 32 cents each extra each share per year. So that's $3.10 for every 10 shares. That increase there. It's a very nice increase. So that is TJX. We have CHD in number 2, cleaning products, 12 years dividend growth, very low payout ratio again, pretty good dividend yield. Ex-dividend is on May 14th. May 14th is it's Monday, so you got to buy it on this Friday or prior. We have May 16th, which is Wednesday. You got to buy it on Tuesday or prior. Ticker symbol KLAC, which is the Clay 10-core semiconductors. This could be a pretty good one. Semiconductors have been on fire recently, so I didn't check this one out over on Y charts as far as growth, but it has been paying dividend growth. It's had dividend growth for the last 8 years. Very low payout ratio, pretty good yield, almost near 3% yield. So for every share, you're getting paid out $3 per year. For every $100 invested, you're getting $281. So it's almost like $100 for a $3 payout. So if you have $10,000, you're making $30 for, oh boy, I can't do the math. $300 for every $10,000 or $30 for every $1,000. So pretty good stock. May 14th there as the ex-dividend date. That is Monday. Gotta buy it on Friday or prior. If you think the stock is a good swing trade, could buy it Friday. Hang in it for a little bit till it rides back up, sell it off. You can see that dividend increase there from 59 cents per share to 75 cents per share. Looks like they did a special payout here, $16.50. That's a crazy payout. But yeah, it looks like they've had very nice dividend growth. Again, 8 years of dividend growth and that dividend difference there. So their company yeah, they increased it very nicely there. It's a very interesting play. So what did it say? They increased their dividend by probably almost doubled it. It looked like AIT. We have Applied Industrial Technology, Industrial Equipment and Wholesale. 8 years of dividend growth. Again, pretty low payout ratio. 1.75 yield. May 14th is Monday, so you got to buy it on Friday or prior to be eligible for the ex-dividend date and the payout date on the 31st of May. Whoops, yeah, this is the one history. So had a couple stock splits, 3 for 2, 3 for 2. Basically, for every 3 you get. Oh, okay. So for every 2 you get 3. So it's basically a share and a half. For every 2 you get like a share and a half. So kind of interesting there. 3 for 2. And they increased their dividend here back in January. A penny, not the greatest growth there. So if you're a dividend growth investor, this one could be a little bit slow to mature and just pay out dividends. So you might yeah, the dividend yield itself is a little bit low, and then their dividend growth has been a little bit slow as well. So if you look at Apple, they increased their dividend from 63 cents per share to 73 cents per share. That's a 10-cent difference. This is only a penny. So there's, you gotta look for the increase as well. If you want that growth, using the rule of 72, basically just take 72, divide it by the growth per year that they average at, and you can see a return. Say if Apple increased their dividend rate, dividend payout by 16% every year, say that's, it's near 20%. So in 5 years, your initial investment into the stock would double in dividend payouts. So we have Snap, SNA, at number 5, 8 years dividend growth. Again, pretty good payout ratio, under 30. That's really good. Pretty good buy-in entry at dividend yield if you want to lock it in. May 18th, which is Friday. Got to buy it on Thursday. And then you would get paid out on the 8th of June. A very nice annual growth there in dividend payout. You can see the history here. Very nice, solid increases from 44 cents per share each quarter to 53 cents per share each quarter to 61 cents per share per quarter, 71, 82. So yeah, very nice, consistent. And this one, while it didn't pay during the recession here, it's only been paying dividends for the last 8 years, meaning that they started increasing back in 2010. They didn't cut their dividend during 2008. This is something I like to check out for during recessions. Do they cut their dividends, such as GE, or do they just kind of lock it and just continue to pay out? So they would, if you got paid $500 in dividends, you would still get paid out $500 in dividends until that kind of period ended, and then they'd pick it back up. They actually have a very solid history of paying out dividends, so something to look for. We have PFS, Provident Financial Services, 7 years. I'm not going to go ahead and cover as far as data goes. We have Provident Financial Services at 3.0, 7 years, 43.5. Ticker symbol HOMB for home branches, near 2% yield. Again, low payout ratio, 7 years. These are all great stocks. That's why they all have a very low payout ratio. The way that we screen them, besides this one being the highest payout ratio, it also has the lowest dividend growth. It's a restaurant one. So this is one I'm not familiar with. Ticker symbol QSR. So if you're interested in a restaurant brand, this one could, better than brand Yum. We have Regional Mid-Atlantic Bank, Savings and Loans, Diversified Investment. So we have a very wide variety of investments this week, starting with department stores, cleaning products, semiconductors, equipment and material, industrial equipment wholesale, small tools and accessories, savings and loans, diversified investments, savings and loans, regional mid-Atlantic bank, and then we have restaurants. So that is it for this video. If you guys have enjoyed the video, remember to like, comment, and subscribe. As a disclaimer, I am not a financial advisor or tax professional. The information provided in my videos is for entertainment and fun. This is not investment advice. This is just me as a financial investor looking for some deals, helping others make their money work for them. I think these are all good looking stocks, but of course, always go take a look at their last couple quarterly earnings. Did they meet or beat the revenue? Did they meet or beat the earnings? Go take a look at their balance sheet. What have they done over the last several years on their 10Ks? What are some of their areas? I forgot what their risks they label it as inside their 10Ks. So, what are their threats and such to the company? Do they have a good moat? Things to consider when investing for the long term. So that is it for this video. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.